Okay, we're back for another one of these videos in the video series called Romeo CRT 2023 review. This is going to be trade number 8. This was an Ethereum or ETHUSD short that Romeo made public on February 12th, 2023. I think it's an example of one of his kiss of death models. We're going to give it our typical breakdown. Let's take a look at the chart here. So as far as the analysis time frame, we're on the 1 hour chart. I'm trying to look for the typical so I think we actually, when I show this in context, so the interesting thing about these two charts is the x-axis of the top chart is a little bit more zoomed in, so you're seeing a little less candles or historical bars on the chart than you are on the bottom. When you're, I think the way I'm going to analyze this is actually in the context of the bottom chart more, and I think that even though he's doing his analysis on the hourly time frame, he's, I think we might be looking at a more broad, a more higher time frame. To do this analysis on. So let me jump into FX Replay and I'll show you. So one of the things to actually really quick before we jump into FX Replay, if you look at the bottom chart, let's just point out all the important features and then we can reference them back into FX Replay. There's actually a couple important features here. The bottom chart shows this really well. So there's this relative equal highs that form. The first high that kind of becomes the key level target for the the kiss of death draw on liquidity is late in February 10th, just before February 11th, and then the other high that doesn't quite make it, so it does the classic approach the key level, then pull back for one final retracement before a kiss of death turtle soup to the final draw on liquidity. That second high is it's midday on February. It's February 12th, just after noon. It looks like you can see if you didn't know what his draw on liquidity was, you could almost see what he's using to frame his entry on the top chart a little better. So you can see that he's got a bearish breaker, breaker entry that he's using, or it's a bearish breaker, where basically traders were induced to sell at that point. But then price rallied, so it kind of became support. But this is former support turns into resistance type of classic TA thinking. But it's kind of interesting how he's drawn this box too, with 1529 spot 20 being the top of the box. So he's not using the body of the 1 hour candle, and he's not using just the wick. He's kind of using a mixture. And you can see that again on the bottom chart as well. Then you can see the key level that formed the original bearish turtle soup, being the high of this hourly candle of February 11th there. It looks like in the early Asian session. So yeah, let's take a look at FX Replay now. I love breaking these down in FX Replay because then you can like really zoom out. You can play with the time frames. So just as far as the context, we're still on the hourly chart. Let me zoom back in actually. So this I hope you recognize the top chart on the on his. I guess it's a screenshot from a tweet. But yeah, so he's basically making his call right there, where he's got that arrow drawn going down there, and basically saying that price is going to go and head for this strong liquidity here to make the kiss of death turtle soup. So he's quite confident that you wouldn't. So a lot of kind of like turtle soup, or CRT people, you might look out for this as an order block, right? So why wouldn't that be? And why would that be something where price would want to trade back into that? Well, I can tell you just looking at this why you would not totally rule that out as impossible, but not actually have it as your base case for analyzing this chart. A couple things. So this large down close candle essentially engulfs, it doesn't quite engulf that swing low, but it engulfs this swing low here. And we essentially form kind of like this, it's not even like a BPR, it's like a double BPR, where it's a BPR that's interrupted by a breaker. So like this fair value gap, this fair value gap, this fair value gap, this fair value gap. So that seems like a pretty interesting, from a kind of a volume, inefficiency type of way of looking at it. That seems like an interesting place for the market makers to choose to then, we could probe that a couple times, and that would be obvious, a pretty obvious place to start. So I'm going to try to draw that box just like he had it, where it was more or less in the bottom half of this hourly candle here, the breaker. And I want to see, so I was thinking that there was going to be something like this, where it was almost like one of these lower time frame candlesticks that was just like literally framing the box, and I'm pretty sure it's this one. So this must have been a candle that broke an important previous swing low, which might have been that one actually. So this it's not really a swing low, but it's a pretty obvious area of inefficiency, where you have like a little bit of a gap discontinuity, you have a bottomless candle there, and so when price finally breaks that low, well, you can take that entire candle that really is the breaker. It's another idea of a breaker. Actually, it is. So, yes, of course it's the breaker. So one of the things I was looking at, breakers are like, you can kind of like go on YouTube and look up what breakers are across the whole universe of ICT traders. They define them differently. I've noticed that Romeo, when he uses, he actually doesn't, he more frequently uses, or at least during this time period, he was more frequently using breakers that were forming kind of as the turtle's soup was in progress. In other words, you could have an inducement high that kind of sets the key level, then the breaker, then the full turtle soup. So in other words, like this would be like the most aggressive way to get short here. And then if you caught that move, then you would catch this wonderful really fast distribution in price. And then I've noticed that when he does have a breaker entry, he will actually use the breaker that's formed not after the turtle soup reaches culmination, but before, or kind of like in the middle of, which I kind of wondered about this before I started this video series, and now I'm like, this is actually probably the second or third time I've seen this so far. Seen him use a breaker like this. But overall, like as far as like range, accumulation into manipulation and then distribution, like it starts here. It starts with like this candle basically saying, okay, like we've got a little too far, now we're gonna have to range. And obviously you can see why, price might have been, like, to use an archaic term, oversold at that point, just relative to how quickly it's been, how quickly it was moving. So yeah, let's just play the rest of this trade out, and we'll look for our lower time frame entry. There's actually, it's funny, it's another example of price being fractal, because there's a initial high that's made within this box, and then there's another time it tries to touch it, and then it dumps. So just like this, which is kind of funny. So yeah, we'll just play it out here. So there's your initial high. And then there's like kind of like the fractal. There's the fractal of the breaker. Sorry if my mic got disconnected there. Yeah, it's funny. It seems like price is just really committed to heading lower, and then it's like, oh. And it almost looks like it's making kind of this like false bullish entry here, where it's like, look, a higher low and a higher low and a higher low. It's kind of like inducements, bullish, inducing bulls into the market here that aren't, in a false type of way, in a manipulative type of way. But then we're going to get one more final spike, if I remember correctly. Just to break that previous high. And it's like, you might ask yourself, like, why do we have multiple tries? Well, many different reasons, but 930, as far as that's like even before Asia market, right? So you kind of have midnight is a really important midnight EST is actually an important time for crypto, just because of the 4-hour candle close, and also the daily. It's kind of like the true daily open as well, but it's a 4-hour close on crypto as well. So midnight is always a great time. It's kind of a London-Asia crossover in terms of just conventional markets, but crypto kind of has its own circadian rhythm. I wonder if we actually do get our entry in closer to New York now. So this is really promising. Like, if you're watching the chart live and we're still we're on the 15-minute, but yeah, you're watching this and it's like this should be like really this should make you really happy, because there's LR for one final spike up, but at the same time there's all this like from inducing bulls into the market, there's all this sell side liquidity as well. I apologize if I seem a little bit more out of it in this video. I was sick the past few days. Okay, and there it is. So it's not going to be this huge explosive. It's going to be pretty subtle, but watch how this candle closes. 5 more minutes. Boop. And then do we get another like little extension higher? Now we can kind of drill down. So it's a little tricky. Let's look at our time frame, and then we can decide what model we should be looking for. Yeah, so like it's kind of funny. Like the original turtle soup, I was thinking would be like 4 hour, or maybe even higher time frame. 1, 2, 3, 4. Well, so if what do you treat as the range? This is always the tricky piece. Yeah, I guess starting from that candle, is it on the daily even? No, it's not. Is it the 8? The 8's looking pretty promising actually for that first like. Yes, I actually think it's the 8 now that I'm looking at this. So in other words, 1, 2, 3, 4, 5, 6, 7. So 7 being the candle in which the manipulation is taking place. So that's a pretty classic like setup there for the original turtle soup. But we're not on that time frame. We're scalping here on the hourly. So maybe you could say that this is a bullish CRT of this candle here, and we want to get in on the 50% of the 50% retracement, right? So we're there, and that's funny that candle that got turtle souped didn't actually get to the premium. But this is our I think it's a 1 hour. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, so 1 hour just barely fits our. I try to cap it off at 12. Like I think you've heard me, if you've watched any of my other videos, you've heard me say that kind of within these ranges, which are essentially pause CRTs, I try to look for between 7 and 12 bars of accumulation after that kind of like, I've called it in other videos, I've called it an origination candle. So in other words, if this origination candle is candle number 1, then, you by candle, so somewhere between candle number 7, which would have been this one, and candle number 12. And I actually think that if you get to candle number 12, that you probably should just go and examine it on a different time frame. Like you should probably, right? Because if you're 12 plus, then you're too zoomed in. You need to. So if you're on the 1 hour, you need to go up to the 4 hour. Just because yeah. So, anyways, he didn't really have a risk reward profile on there, but I'll put one on there. So if that's his target. And you could set a pretty aggressive 3-1 if you wanted to. Yeah. So it's great because that 3-1 is basically saying like, we've stabbed into the body of that 1 hour candle, and yeah, and we're gonna get displaced lower. We are not going to fully wick past that old open there. So it's kind of interesting. With that 3-1, gives you that certainty, I guess, going into the trade. So we'll watch the rest of the play out, and just to see. So we've got 11 candles of accumulation into manipulation, which the way I like to think about it is it's always like a kind of a 0.3 to 1, where if you have or let's make it easier to understand. If you have 10 candles, look, this one even faster, because ETH is like in this insane sell-off right now. But yeah, it went way faster than my standard. So my other standard with going from accumulation into manipulation into distribution is I like to think about and this actually helps me like stay in trades and also get out of trades. I literally have been, I did this week. I might talk about it in my weekly review, where I literally cut a trade because it wasn't distributing fast enough, because it wasn't fitting my standard of essentially reacting off that manipulation, that supposed manipulation. It wasn't reacting fast enough, so I cut it. So what would be fast enough for 11 bars? Well, 10 bars, I like to see this ratio roughly. I'll make the text a little bigger actually so you guys can... I like to see a 10 to 3 ratio. And it whenever you see the 3, yeah. So 10 to 3 is like a good like average of it. As with anything in trading, it's like a bell curve, right? I mean, except for the distribution of returns, right? Blah, blah, blah. We learned that in 2008. It's kurtosis. But anyways, I like to see in this, when I'm trading this methodology where I'm looking for accumulation range into manipulation and distribution, and I'm counting these candles, and let's say I count 7 candles. Well, you know, I'm probably, those are the ones that are more likely to take 2 candles to resolve, right? Whereas if I'm counting 11 candles, then, you know, if you take that's the same thing as 10 to 3 is the same thing as 11 to 3.3, right? If you do the math. So that would be even like, that's even like giving you a little bit more a little bit more allowance for things to distribute slower. In a more simplistic fashion, this is like it's about a 3 to 1. So in other words, and you shouldn't think about it like this, because you're never really going to take a trade after only 3 bars of range, right? It's going to be more like a 9 to 3, right? So that's more like a 3 to 1. And I've seen it consistently go faster than a 9 to 3. So in other words, if it's only 9 candles, then again, I'm expecting only 2 or 3 distribution candles. And obviously stuff happens with trading and stuff happens with markets, and the timing between like all the crossovers between Asia to London to New York PM, and I get it. So we're putting these logical heuristics onto a totally imperfect world. But yeah, so this is a pretty brilliant kiss of death entry within. It's kind of cool because it's a kiss of death within a kiss of death, right? Because this gigantic move caused this turtle soup to form. Or let's say, I'm going a little too fast. This gigantic move caused this accumulation to form, which eventually had to be turtle souped, because we haven't hit our key level yet. And this gigantic move caused this smaller accumulation to form, because we hadn't hit our key level yet. So it's like kind of a fractal. It's the Russian nesting dolls, right, of fractal price action, which is really cool. As far as key levels go in ETH, I mean, man, one of the great trades from 2013, I think, is when he calls the bottom on Bitcoin. Here, I'm pretty sure, or actually, Bitcoin was already on the way up. He called it here. Yeah. So like, if he called it there, then our key level is like just spitballing here, but it's right around here. Right, so it's either here or it clears this swing low on ETH and it doesn't on Bitcoin, and I'd have to pull up the exact chart to see, but that's what I'd be looking for as a CRT. It's funny, I don't talk about CRTs all that much when I do this analysis. I'm really focusing on turtle soups, but you know, if I still think of myself as a CRT trader, even though I'm not into that whole symmetrical thing. The C, the candle, in my trades that I look for CRTs setups in, they're the origination candle. And the origination candle, more often than not, is actually a CRT in the opposite direction that or causes a CRT in the opposite direction that I'm looking to trade in. So the way I'm trading right now is I'm almost looking for like 2 CRTs put together. Like, for example, this is a bullish CRT because this candle, when the market gets oversold, that's a CRT entry, right? It doesn't actually get completely, you never get to the CRT low for your entry. You kind of have to be satisfied with like maybe that candle body, or let's call it this candle. Actually, yeah, it's this one. Yeah, so you can tell I'm not really much of a CRT trader looking at this, but yeah, oh yeah, we just get there. That's funny. That's a crazy turtle soup because I was more focusing on this turtle soup, but that's a turtle soup of that high, and it's actually is a sniper entry. No, it barely turtle soups both those highs. Yeah, that's very crypto. It's like these teeny little margins. Yep. So, anyways. Oops, I'll do that. Jeez. Okay, good, I am. I was just checking to see if I was actually on FX Replay on my streaming software. Yeah, so I'm getting a little distracted, but like, the point I'm trying to make is that the way I'm trading right now is I'm basically like, how everybody's got those like stock screeners. The way a novice approaches the market is like they'll scan the headlines. If you sort your watch list on TradingView by percentage moved, and you could be like, oh man, like gold. Look at gold. Gold rose 3% today, or gold fell 3% today, which it can just do on every day it can do that. It's a super liquid commodity. Whenever you have those big days, you have vol selling. And so the vol selling, in my mind, is what creates that, what I would call an origination candle, which it's this candle that just kind of sticks out like a sore thumb. Maybe it broke a significant old low. So in other words, this is the origination candle. This is the bullish CRT. And then the thing about the bullish CRT is it's not a symmetrical CRT at all. Like, not even close. Like, the time it took to form this price action it's basically like it's basically like the same ratio I'm working with here, where this is your 0.3, because this is like the previous distribution, right? And then this is the 1, like the range before the next turtle soup is the 1. So on Romeo's slides, on one of his CRT courses, he had this different types of CRT, and then he's got, I'll put it in one of my slides actually. I'll dig it up and I'll just screenshot it and put it in there, and I'll show you guys. But he's got this idea of a pause CRT. And so my setup is a pause CRT into a turtle soup. And I think Romeo's setup all throughout 2023, it looks like, were these pause CRTs into turtle soups, where you have this famous, it's, yeah, just playing those ratios and playing the direction and the trend with the short-term entries, with the higher time frame bias, and just letting all the confluences stack together. And it's so nice because you have an expectation for so many different things. Like you always know where to put your stop loss. Like you always know how long you'll be in the trade. It's just such a consistent, awesome way to trade. And I can see why he was trading like this for all of 2023. Like I think I'm just gonna trade like this, like indefinitely. So yeah. So that is the Romeo. I'll go back to that PowerPoint really quick. That is Romeo trade number 8, the Ethereum short. Lots to learn from this one. Lots to learn from them all.